Now going to move on to section C2 on page 83 that looks at the property insurances. And under this, we're going to have buildings, machinery, stock, and so forth. Because remember, when you see the term or hear the term property insurance, property is stuff you own. You own your car, you own your house, you own the contents in it, you own your phone. Yet property is just the insurance of stuff we own. Now, the starting point for indemnity on property would be the value of the property at the date and place of loss. So for instance, guys, if my car was stolen today, will my insurer pay me the cost of buying a new car? Or will they pay me what I bought the car for? Or will they pay me what the car would be worth today? Oh, apologies. Have you got sound back now? I think I somehow managed to lean forward and bump my mute button on my desk. So apologies. Yeah, I think if you think of car insurance, unless it's a new car that's less than 12 months old, less than a certain amount of mileage, you're the first registered keeper, then you might get new car replacement, but that's only really applicable in a very small situation. So for most situations, the starting point for indemnity with a car will be what was the value of the car at the date and place of loss. So yeah, market value. And that's pretty much the same for most property. It's not what you bought it for, it's not what you could sell it for, it's what it's worth to replace today, the day you've lost it. And that's what we're going to look at. So let's start with buildings. So we're back to our badly damaged or totally destroyed building that we saw under reinstatement. So we've kind of already discussed, reinstatements about restoring or rebuilding the building back to new. But guys, how do we measure how much insurance you should have for a building? So if I came to you today and said, look, I want buildings insurance, how would we work out how much buildings insurance I need? Okay, so when we're talking about the valuation, I guess the key is not the valuation of its market value, but the valuation of its rebuild costs. So I guess the key to understand with this, and I'm seeing some good answers coming up there, is that we know that we will indemnify you for the cost of repairing or reinstating your property at the time of loss, including any betterment. So actually, if you own a house that's worth £500,000 and that house is completely destroyed by a fire, then the insurer is not going to pay out £500,000 because that's not going to be what it costs to rebuild your building. Because guys, when you buy a house, what else are you actually buying that if the house is destroyed you still own? Yeah, definitely, guys, the land. So for an insurer, it's not about them paying you the £500,000 it costs to buy the house, because at the end of the day, they don't need to buy the land again. You already own the land. It's just about the bricks and the mortar, the cost to rebuild the bricks, the mortar, the labour, the fees, the debris removal. Yeah, builders. I guess that's their job, though, isn't it, to make profit out of building houses? Now, guys, I saw some other interesting things that come up in the chat box about surveyors, about the chartered surveyors, and about the BCIS website. So the BCIS, Building Cost Index Service. You know, there are these different portals, because actually a lot of people don't know what it would cost to rebuild. I mean, I used to try and say back in the day for my customers, you know, what was 2/3 of your purchase price? But then that was applicable for the area we were in at the time. Obviously now land can have different values in different places. So yeah, guys, think the indemnity for buildings is how much it's going to cost your insurer to repair it or reinstate it plus betterment. So yeah, that's quite important. Guys, when we use the term betterment, what do we mean by betterment? Yeah, Sarah, I just saw what you put there, blanket, hence blanket cover. Yeah, because a lot of customers don't know what it costs to rebuild. So we do see a lot more insurers offering blanket cover to make it a little easier. Yeah, better than before, improvements. So in essence, if we think of that building on the screen, guys, it's going to have new plumbing, new wiring, new insulation, new decoration, new flooring. You're going to need to build it, definitely sell it to comply with the current building regulations, but also everything's just going to be new. Now you're better off because everything's new. I'm not saying you should blow your building up as an alternative to having to paint the front room, because then they'll do it for you. But by default, if they're rebuilding your house, they are going to repaint it, repaper it, you know, and so forth. Extreme way to get your house decorated. Now, that's the measure for buildings. Now, guys, because do you reckon most customers know what it costs to rebuild their house or their property, their building, let's say? Not a clue. Yeah, definitely. You know, I'd agree with them, Martin. You know, people just don't know where to start. I mean, most people just insure for what they bought it for because they don't understand this. And in fact, there's plenty of people I've trained over the years who work in insurance that didn't necessarily know that concept because they don't deal with that type of insurance. Now, when someone gives you the knowledge, you can go, yeah, okay, that now makes sense, but it's having that knowledge in the first place. So some of the people in our own industry don't even know that. Customers pretty much stand no chance. Yeah, John, potentially, you know, if they're not sure, we can use previous years plus inflation. Then there's options, isn't there? There's options for us to look at and find out about. Now, obviously, a moment ago was mentioned about, Sarah mentioned about blanket cover. I think a lot in personal lines insurance, so, you know, for private home insurance, we do see a lot of that blanket cover usage. Sometimes you see it in commercial, but in commercial, there's usually a lot more of a requirement for the customer to know more things and provide more information. So in your book, at the bottom of page 83, you should see a little table that talks about these reinstatement conditions. Now, guys, what is a condition on an insurance policy? What could be an alternative word that we could use instead of condition on an insurance policy? Potentially, Sarah. I'm going to use that one because, you know what, I like simple words, and that's the simplest way of potentially describing it. Yeah, Rachel can see the word warranty. Yeah, Sally, you know, it is a requirement. So in essence, conditions are like the rules of the policy. So this is like the reinstatement rules. So on some buildings policies, you might see one of these reinstatement conditions, so one of these rules. And basically, insurers put these conditions, these rules into the policy to try and make sure the customer is at least making the effort to have the right amount of insurance. Because if I'm your insurer and I'm going to reinstate your building, so, you know, do the whole new for old, rebuild it back to new, then you as the customer at least need to try and make sure you're making an effort to have the right amount of insurance. So we sometimes on commercial policies, I mean, I don't remember last time I saw one on a home insurance policy, but could be out there still. We'll have one of these conditions. So we've got the reinstatement memorandum. That could be one of them. Now, the reinstatement memorandum is the rule that basically says the customer must have the right amount of insurance for what it would cost to rebuild the house at the time of loss. So it'd be like you've come to me today to get insurance for your office, and I've said to you, right, how much will it cost to rebuild your office when it falls down in the future? Well, firstly, most customers wouldn't know how much it would cost, and certainly wouldn't know how much it would cost at some random point in the future. So with the reinstatement memorandum, one of the key things I think you need to think of is what we're seeing here is the 85% I've just circled. So the reinstatement memorandum basically says as long as the customer has 85% of the value of the loss insured at the time of the loss, then they will pay out in full. So in other words, just to make the math simple, if it's going to cost £100,000 to rebuild my house at the time of the loss, as long as I have got an £85,000 sum insured, my house is going to, well, my building will be rebuilt. If I've only got 84,000, then they're not going to reinstate because I'm under the 85%. In fact, what they'll do is they'll give you a reduced cash payment based around this concept called average that we'll discuss in a few slides. So guys, for me, with the reinstatement memorandum, remember it's just a rule on a buildings policy. And it basically says, as long as you, the customer, have at least 85% of the actual value of reinstatement insured at the time of the loss, we will pay out. Now, this doesn't mean customers should be knowingly underinsuring. They should still be trying to insure correctly, but this just deals with the fact that they might not have their figures correct, and there might have been an error. Now, option, so that would be, let's say that's option number one. Well, option number two could be what's known as the day one reinstatement. Now, day one reinstatement is where I actually say to you, okay, how much would it cost to rebuild your building if it's destroyed today? And sometimes that's a slightly easier figure for customers to be aware of because they might know what the value of their property is today. So I say to you today, right, how much is it going to cost to rebuild your building if it's destroyed? And you go, right, Colin, 100,000. Well, what I then do, if we have the day one reinstatement rule, is I recognise the 100,000 you've said. I give you a 50% uplift, so you're actually going to end up having a sum insured of 150,000, but you will pay a little bit more on your premium. So in other words, I'm giving you 50% more than you asked for, but you pay a little bit more on your price. Now, because I've given you that uplift on what you've told me, and bear in mind, you should have been telling me the correct value at the start, there should be zero chance of you being underinsured. So with the day one reinstatement, there is no margin for error. If you are £1 underinsured, then the claim's not getting settled in full. And that's because I've given you 50% more than you've asked for. So you should be giving me the right value to start with. So guys, those are two possible rules you might see on a buildings policy when it's trying to put in rules around reinstatement. Personally, I've only ever seen them on commercial policies. I mean, guys, have you ever come across any of these sort of rules or conditions on any of the policies you've sold? Okay. I mean, to be honest, some people, very rarely do I get people go, oh yeah, I see that on the policies I sell. And even sometimes when we do sell them, if we're acting as a broker, we might not look into it in this depth. And even if we're selling it from an insurer's point of view, these are rules that are often buried very deep in the conditions.